Welcome to Non-Beta Alpha. I'm Ryan Morfin, and in today's episode, we're going to discuss the war on supply, Putin versus Saudi Arabia, with industry veteran Matthew Ayak from U.S. Energy Development Corporation. Matt's here to talk to us today about what's going on in the oil and gas space. This is Non-Beta Alpha.
I guess I didn't know. I guess I didn't know.
Matt, welcome to the show.
Thank you, Ryan. Glad to be here.
So, Matt, I know in a previous career you've managed $1 billion of client assets as a broker, and prior to joining U.S. Energy, you were kind of an advisor, going through a lot of the same things people are going through today. But now, as an executive at U.S. Energy, can you maybe go into a little bit of what's going on in the environment today, and what brokers need to be thinking about when they're talking to clients about the oil and gas space?
Yeah, thanks, Ryan. Both are correct. Yes, I've been with U.S. Energy for almost 15 years now, probably just over, and former life as an advisor. So I fully respect the angst and agita that many clients are having today, not just relevant to their investments in the energy sector, but probably across the whole spectrum. So I'd love to focus on the energy sector as much as I can provide some value and some guidance to hopefully give people a understanding of where things stands now, Saudi Arabia, Russia, the U.S., overall pricing and how it affects the overall investment portfolio.
So today, we'd love to get your opinion just on some recent headlines in the oil and gas space. Everyone's really focused on covering the COVID and the virus pandemic, but a significant impact has been made across several industries. Oil and gas is no exception, but there's something brewing that's larger that would probably be top news if it wasn't for all this other bad news that's surrounding us today, which is the war that's going on between Saudi Arabia and Russia, and why it's going on and how it's impacting U.S. energy producers. I'd love if you could just go into that a little bit and share your insights.
Yeah, so the backdrop of all this is you're right. If COVID wasn't or Corona wasn't the top of everyone's lips, I think that the number one news headline might in fact be the supply side war that has occurred once again in the oil industry. And kind of a backdrop, Corona did obviously come to a head in February when the spread started and you started to see Russia and Saudi Arabia disagree, or as they call it, OPEC Plus, start to disagree on future supply cuts in terms of stabilizing prices, what was then to be seen a significantly smaller impact than what we're seeing now. And by both parties standing their ground, in essence, doubling down by opting to flood the market with additional supply, that itself would be a major headline. Repeating the 2015 era of the Saudi playbook. It appears that the Russians are doing a very similar stand, and Saudi Arabia is digging their heels in as well. So it's a really unique headline, one that is actually almost being thrown out because the supply side, if we talk about a normal equation, you have a denominator and a numerator, and we would be talking about one side of the equation. But now that the other side of the equation, the denominator in terms of actual demand is the biggest question mark, it almost makes some of the posturing less important than trying to figure out where demand will fall from over 102 million barrels a day of demand down somewhere. Is it 90 or is it 80? And then ultimately, what levers are there to trying to control that price decline with or without the stance of Saudi Arabia and Russia that is occurring in that backdrop?
And so, the pricing of oil that we're seeing today, could it possibly go lower? And how would that play into kind of production levels that U.S. producers are facing, whether they want to produce or not?
Yeah, I'd love to tell everyone that this is the bottom of oil prices, but it definitely could go substantially lower. In fact, there's conversations about below zero. And in many aspects, oil is and will be below zero for many producers. And in fact, you're probably less than 60 days away from being unable to store additional supply, and thus there'll be parts of the supply chain that will be having negative arbitrages, not $6 or $10 or $14 a barrel, but to the point where it's a negative pricing, even if the actual market price didn't drop further from here. But aside from regionality and storage issues, I think with algos running the market now, and hedge funds really dominating money flows, you could absolutely see triggers that bring oil down as low as $5 a barrel. I don't know if the conditions are there yet, but it's an absolute possibility that you don't hit bottom yet because of the technical side. So you have the fundamental side on one side of the equation, which I originally discussed, and then you have the technical side. And both are still at risk, which means that you could be rolling the dice for lower prices. And again, this is more of a short-term than a long-term conversation, but that risk is real.
And some people talk about, people being forced to pay others to drag oil away from the drilling sites. Is that a real possibility in today's market or in the future market?
It is. I just people don't really recognize that in parts of the world is this supply side fight. Russia and Saudi Arabia having a fight for the control of the supply chain, which I will hold a whole separate argument of why I think that's a useless and silly fight, because buyers aren't really stuck with any one seller. They're not really loyal to anyone but the lowest price. So to have a supply side fight is somewhat of a silly fight, but Saudi Arabia is already selling oil at $12 to $13 a barrel below market price to Europe to try to supplant Russian supply, which means at $20 a barrel, you're down to $8 or $7 a barrel that they're selling oil to. Their lifting cost and might be $5 or $6 a barrel, but at the end of the day, and the answer is yes. There is absolutely, as prices drop, and even in current markets, as storage fills and capacity people might have to pay to take oil or even natural gas away. And ultimately, when you have the U.S. has significant legal ramifications for not producing wells that are already in production, so to not lose leases to landowners, to not have certain conditions in terms of contracts with midstream companies that are guaranteed takeaway capacity. You have significant issues where people could be, and in fact, losing money per barrel.
One question I had is, I know in the last, call it 5 or 6 years, a lot of these kind of call marginal producers have been ramping up leverage, and now they're in a position where oil prices and their revenues are severely curtailed. What's your view and the outlook of those companies that are over leveraged today, and how is that going to play out in the market?
Yeah, so markets usually have a natural level of capitulation and companies going through bankruptcy and kind of restarting. And I think the last downturn really was almost unnatural in that there's very little capitulation. There's a lot of zombie companies that are over levered, have been able to kick the can in one way or another. Most of the bankruptcies were Chapter 11 and really were nothing more than financial reengineering in 15, 16, and 17. So what you had is debt holders taking the equity holders out, taking possession of the companies and the assets, but never actually going to market. And we've really never had the free market take over in that forced capitulation. And I think you're finally going to see a mass exodus and wipeout of companies, really even here at 20, but especially if there is any even technical move down because of algorithms in the market, or fundamental move down because Saudi Arabia and Russia refuse to or keep their heels hammered in. There's a lot of other global fallout for the other OPEC members: Algeria, Nigeria, Iraq. There's significant fallout everywhere, but in the U.S. specifically, I think those zombie companies, and there are a lot of them, will ultimately now be out of business. And I'll come to my conclusion, which I'll reiterate multiple times probably on this call. Anyone who is long cash and short on debt is probably in the largest generational opportunity in the energy space. They're just going to have to be very patient and wait for those opportunities to come to them. But there is going to be hundreds of billions or trillions of dollars of loss unless there's someone who steps in and interferes with the capitalistic process here in the U.S., which could happen. State regulators are already starting to get involved, as is comments from the White House. So there could be a backstop to all of this. But ultimately, in the free market system, which is the healthiest system, there's going to be more pain before there's gain.
So, going back, so where did all this start? I mean, did Putin really want to take aim at the U.S. fracking and marginal production market, or and the Saudis were basically stepping up to protect our market for a period of time, and now they're saying they're finished? Or is this something that's a personal rift between these two countries because of Syria? What's your thoughts on what's really playing out this pricing war between these two superpowers in the oil space?
Yeah, so Russia has always wanted and has really been frustrated by the U.S. coming out of the last supply side war in 14 with a lion's share of the market. So there has been the United States has increased production by 6 million barrels a day. It's an utterly frustrating process for them. Saudi Arabia attempted this move once and failed miserably, and actually lost a significant amount of supply side control in the last price war. And that tends to happen with capitalism, right? You drop prices, people get more efficient, they can operate at a lower cost. The reality is the U.S. is still a higher cost producer than both Saudi Arabia and Russia, and will remain. Shale is a more expensive production level. But the reality is the world doesn't want two oligarchs and despots in control of pricing. It really wants the U.S. It's almost an American obligation for the U.S. to become independent and stay independent and keep our supply side control. Because ultimately, I think what it does is it keeps us in a world where we're not going through Corona and also paying $80 oil. And I think ultimately the U.S. is a godsend in so many ways for the revolution we've had and not allowing these countries to have the ability to produce oil at $90 to $100 a barrel and force everyone out of the market. I also think the supply side war is silly in the sense that even if you close every U.S. oil and gas business, including the majors, as oil prices rise, a new company will come in and other companies will come in and fracture at efficient, low costs. You can get production to market so quickly that at 40s and 50s and 60s, the U.S. will once again supply the world with and will wash the world with oil to keep prices from staying higher or lower than Saudi Arabia and Russia want. So I think all of this is very interesting. So yes, you have the Russia side that would like this, but people don't recognize that Russia's conditions of producing oil aren't exactly easy to ratchet up and ratchet down production. A lot of them are extreme conditions. And ultimately, they really don't have the same levers. They want to produce and they're going to continue to produce. They have smaller levers than Saudi Arabia does. So they weren't really in the position to continue to cut without it having a major cost to them. Now, they also can't afford this. $20 oil, really $30 oil and below puts them in a complete recessionary scenario. So although they have the balance sheet to afford this for a couple of years, Putin has an awful lot of political risk. He wants to stay in power, going through a massive of tariffs of you name it, that'll probably come hurt them. So they want lower, probably not this low. Saudi Arabia, on the other hand, did always want to keep prices modest, but has now stuck its heels in this battle, trying to fight with Russia, not really against the U.S., but it's also not working with the U.S. It would like U.S. to take a significant part of this pain. Unfortunately, it doesn't work as quickly in the U.S. as shutting things down or slowing things down, but they do want us to take a significant amount of this pain and go away from 13 million barrels a day, maybe down to 10 or long term.
So who do you think blinks first? You think it's going to be Saudi Arabia or Putin?
Ooh, I don't think it'll be Russia. I think Russia believes they have the strongest hand. I believe if Russia can get what it wants, which is really difficult, because what it wants is the U.S. to come into compliance and to jump into this negotiation with OPEC Plus and cut supplies. The problem is that violates U.S. antitrust laws. The Texas Railroad Commission is already in negotiations, but it can't really act as a country to, in essence, stop capitalism. So I think the more likely scenario is you're going to have a lot of short-term pain. You're going to have a slight and significant long-term production decline in the U.S., which is going to be lower prices than people want them. A lot of bankruptcies, a lot of retooling of the industry in the U.S., but also Saudi Arabia and Russia not getting what they want long-term, which is any type of control where it can't just be turned back on in the next high price. So I think So I think all of the above, short-term pain and long-term gain, that could all be put to bed very quickly if Russia and Saudi Arabia do decide to get together, and there are some levers pulled by the U.S. in terms of it opening up its strategic reserves and buying some of the reserves, along with a bunch of other measures like the Texas Railroad Commission doing what it did in the 70s and ultimately limiting production from the state. There could be some all of the above. That doesn't seem likely because you have capitalism in the mix against a bunch of oligarchs who are very stubborn in their way. And it basically means everyone has to lose. And I'm not sure everyone has that. And the reality is, Ryan, as you and I were talking offline before, it depends on how long COVID sticks around. Because if you have a demand side destruction of 20% of the market, there's not enough levers to pull. You're going to have a substantial reduction in price for that period of time. Now, as soon as that goes away and the global production goes back to a norm, obviously you'll have a massive pendulum swing. But until that point in time, there's really no controlling where the prices go from a fundamental or a technical standpoint, which means Wall Street algorithms are going to run wild and have massive volatility in price.
Well, Putin's recently also leveled the playing field during this coronavirus. He's made himself president for life by changing the Russian constitution. So he's now on par with the king of Saudi Arabia to not have local domestic politics interfere with his time horizon. Well, I got one more important question for you. Who do you think wins in a bar fight, Putin or MBS?
It's a phenomenal question. I think the U.S. wins in a bar fight.
The U.S. wins in a bar fight. All right.
We win in a bar fight. But hey, listen, at the end of the day, there's a ton of optimism in the space, Ryan. There's going to be a lot of pain. There's going to be a lot of E&P companies that aren't there 5 months from now. But there's going to be an awful lot of gain as well. The U.S. will come out just as resilient. The energy market will be just as technically sound. My only concern, truthfully, is something I don't have the bandwidth to measure. And that's if the oil and gas market as a whole takes a substantial hit for 3 months, 5 months, 6 months, and there is a retooling of the whole industry. It unfortunately is what led the U.S. out of the last recession. And I'm unsure as to, without that industry, the U.S.'s V-shaped recovery versus U-shaped, right? Because I don't want to speak for others, but I truly believe that you now, with the passing of this bill, have a more likely scenario of a V-shape if this corona can be contained. But the oil industry could be the one question mark. It was the leader the last time. And without it, I do wonder where that major inflection point comes to move the market higher, faster.
All right. Well, that's all the time we have for today, Matt. I wanted to thank you for coming to the show today. We appreciate your time and your insights, and we hope to revisit this conversation. I'm sure it'll continue to be a timely conversation going forward. So thank you so much for your time. I know you guys are very busy right now.
Thank you, Ryan.
Thanks for listening to Non-Beta Alpha. And before we go, don't forget to subscribe and leave us a review on Apple Podcasts or our YouTube channel. Our next episode will speak with a Shanghai native that will tell his story on the first few weeks in China during the COVID crisis. Give us some perspective of what they've been going through since they've been a few weeks ahead of the U.S. Until then, this is Ryan Morfin signing off from Non-Beta Alpha. Thanks for joining us, and now you know.